Good morning, Paul Georgie from Allendale. It's June 25th, Monday morning, and we're off to the races in the grain markets. Weather forecasts are dry. The temperatures are expected to heat up here later in the week, and that certainly has got this grain market sharply higher here this morning. We gapped higher above resistance levels in the corn and in the soybeans. We got November soybeans now over that critical $14 level, and we've been strong all night. Now the thing that you have to take notice of is we've been in relatively very narrow range overnight. So we've opened higher and basically stayed in this narrow range throughout the night session. We'll have to see what and how much more enthusiasm we can see and get in this market as we go into the 9:30 when the open outcry starts. This burst of heat that many weather forecasters are talking about here later in the week for the Midwest, where temperatures could reach 100 plus, is definitely a concerning factor to the corn crop and soybean crop, more so the corn crop, as we get into a greater number of acres that will be pollinating. Without the moisture and the heat, some very critical times, and that should say days ahead of us here as we go through this time period. The grain markets, however, are running into some real headwinds when it comes to the macro side of the equation. The equity markets are under pressure around the world. We've got the dollar sharply higher here this morning, which means the euro is lower, and for several factors. The EU Leaders Summit is to take place later this week, and the Greece leader, the new leader there, is not going to be in attendance at that meeting. And then the question is, what will they accomplish? The talk right now is that they're going to outline some banking procedures and then wait until October to make some final decisions on it. There's also, over the weekend, George Soros has made some comments about how concerned he is about the European economy, and that, I think, is also causing some fuel for the fire here and some pressure in the markets as we open these equity markets here on Monday morning. So we've got a real tug-of-war going on there, but the factor that the producers and all of us in agriculture are worried about is rain, and the rain in the forecast now for later this week has been moved to the northern part of the Midwest and over into the eastern Midwest. Not any rain coming in the central part of the Corn Belt here, where it's needed dramatically. The crop conditions report out this afternoon expected to show some decline in the good to excellent, again anywhere from 2 to 3%. We wouldn't be surprised to even see a greater number than that, as this conditions report is, as many think it's a beauty contest. The crop certainly doesn't look very good when you drive around and look at it from the car. It's under stress in all areas, even areas where we've seen some rain with the hot temperatures coming in. So those are the factors we got to deal with this week. We've got a USDA report at the end of the week that's going to be extremely critical and a big market mover, I think, one way or the other. The acreage number, planted acreage for corn and soybeans, the quarterly stocks number will also be critical as we get that report on Friday morning at 7:30. So look for some volatility here, and look for some support on any kind of setbacks in the grain markets. In the livestock market, we had cattle on feed report on Friday afternoon. That was a bit bearish in all categories. The on feed number was a little higher than expected. The placement number was 15% higher than a year ago, which was higher than what the trade was expecting. And the slaughter number, or the marketing number, was less than expected. So you got to think that we'll open this cattle market lower for that reason. Feeder cattle more than likely will be under pressure due to the stronger grain prices here this morning. So look for some weakness there. Cutout values were down slightly in choice. Select was up just a little. The pork complex, however, though, could be a little stronger based on demand. Products were higher. Cutout values there were $2.35 higher on Friday. We continue that climb and continue it at a pretty good clip. So look for hogs to be supported on any kind of a setback. The outside and influences, the macro influences, could put further pressure on these livestock markets as we open here this morning. So a lot of things going on. A lot of reason to stay in touch with Allendale's research. I want to remind everybody we do have the webinar, the Ag Leaders webinar, out tomorrow evening at 8 o'clock. You can log in, watch that. We've got Drew Lerner and Rich Nelson will be our key guests there. We'll be looking at the supply-demand situation and the effects of these dry conditions, and also Drew will give us some outlook on what he feels the chances of this weather changing. So check in with the website and get logged in so you can get online at 8 o'clock tomorrow night. So if you got any questions, don't ever hesitate to give us a call at 800-262-7538. We wish everybody a very successful trading day, and we will talk to you tomorrow morning.